So Shang-Jin, for you, during the past 12 months particularly, we've heard some extraordinary news stories. And they started as fragmentary, but they have become more repeating. 60 Minutes had a piece last March on empty houses and empty cities, and that's been repeated in CNN and in The Economist and in several other places, so that it is now becoming a more familiar story. But we are hearing of very large numbers of empty, high-end apartments and houses built all over China, and increasingly entire empty cities. So, for example, 60 Minutes claimed that each year in China there's another 10 to 20 new entirely empty cities, and they had their people walking around the streets of some of these cities to show them to you on television. It seems such an extraordinary event. It sounds like such a waste of capital because houses depreciate when they're not lived in. So what would happen if this is true? And we don't know the extent of which it's true, but let's just hypothesize that it is true and that we've got somewhere around 30 or 40 million empty residences, which is what some of these reports are saying. That's just extraordinary. What if that were true and the prices of these houses and high-end apartments started to decline? If some people said, this is just getting ridiculous and I think I'll get out and sell. What consequences would follow for the Chinese financial system, for the middle class, and for the economy generally?
Well, first, on behalf of the Chazen Institute, let me welcome everyone to the event. On David's questions, I interpret David's question as asking how big is this risk of a potential massive correction of housing prices on the economy. At this moment, Chinese top leadership is meeting behind closed doors, plotting the reform strategies for the next 10 years. If you were to close your eyes, imagining you are in the room, they're talking about risk facing the country, facing the leadership, remedies they have to undertake. How likely will you hear a extensive discussion about this housing price risk? So I close my eyes, I think about it. I think that perhaps I will not hear very much about this. The reason you don't hear much about this is, my travels to China and talking to business people seems to suggest that people don't really agree on the ground that there is a massive overbuilt. I mean, there are obviously overbuilt houses, empty apartments, and may very well be empty towns. I don't know about cities, but are they? Any time, you always have, stupid investors make foolish investments. You would take the same percentage, multiply by 1.3 billion, you can get a very large number of stupid projects. But the people I've talked to, including real estate people, don't seem to think there's no consensus that there's a massive overbuilt houses. But take that as leaving that aside. Suppose there is a overbuilt housing problem, and therefore you might see a correction in housing prices in the months or years to come. Will we expect to see similar collapse of the economy the way we saw here in US and in Europe? I would say there are reasons to think that's probably the risk is not of the same type, but you're not going to see as big an effect on the economy for a given drop in housing prices. Why do I say that? Well, there are two main channels for a housing price correction to affect the economy negatively. One is the so-called wealth effect. When housing price drops, people feel less wealthy, people consume less, demand drops, economy drops. That's one channel. The other channel is input-output linkages. To build the houses, you need to have cement, steel, furniture, and so on to go with a completed houses. If construction stops or if construction slows down, economy is affected negatively because there will be less demand for steel, cement, furniture, and so on. So let's think through those two channels. On the first channel, we know the Chinese are famously love to save. Indians famously love to save as well for a variety of reasons. I have additional research suggests why that's the case, but let's leave aside. In the past decade, when Chinese housing prices were rising, Chinese housing prices have been rising at a very, very fast rate over the last 15 years or so. We don't see corresponding increase in consumption for a given increase in housing prices because people actually, the propensity to save out of a given increase in wealth is much higher in China than in the US. For the same reason, when the housing prices drops, you're not going to see corresponding drop in consumption just because the propensity to save and propensity to consume are different. That's reason number one. Reason number two, on the input-output linkages, starting from the end of the last government, current government is in place since March, the two governments have been talking about strategies and measures to address wealth inequality, income inequality issue in the society. And one of the concrete strategies they've been talking and started implementing is to build what they call social housing, essentially low-income housing. And there's massive government program to build low-income housing. Of course, to build low-income houses, you also need cement, steel, and eventually furniture. Maybe not the same type of furniture, but you need the demand for those. And that, to the extent housing price correction happens in sort of normal housing markets, the social housing construction will at least partially offset this potential negative effect coming from the input-output linkages. There's actually a third reason why perhaps we need not be too overly pessimistic, and that's because government policies, of course, are not fixed, are not standing still. In the last few months, the central bank decided to hold monetary policy tight to correct in its view, over expansionary stand in the previous year or so. When it makes that decision to keep the money policy relatively tight, to hold down a rate of credit expansion, it makes the judgment that housing market risk is not very big. If it sees signs of a negative housing price correction and potential negative effect on the economy, the central bank would have some capacity to counter that. The fiscal authority, the Ministry of Finance and government generally, also has the fiscal policy to offset that if it needs to, relative to other governments in the world, relative to governments in Chinese neighborhood, for example, or North America and Europe. Chinese government's overall fiscal position is relatively strong, reflected by relatively low overall stock of a debt. This means it has still a few more bullets or weapons in its sleeve if it needs to deal with a macroeconomic slowdown. So the combination of the three reasons lead me to think perhaps we would not expect to see massive slowdown coming from housing market.